Welcome back. Thursday morning here on Squawk Asia. Take a look at commodities now. They're doing early Asia this day. We've got Brent pushing 123. NYMEX is at 106.28 on the front month. Gold 17.75 and silver 34 and a quarter. John Licata, CEO, also chief commodity strategist at Blue Phoenix. He joins us live out of New York. John, good to see you. Let's talk about this first. We've been spending a lot of time this morning focusing on what's been going on down under in Australia, a potential leadership challenge, a potential change of government, etc. Let's take this a couple of steps forward and talk about one of the big risks or fears, and that is with this minority government of Gillard, the Labour government, if it falls, if they implode and basically literally kind of kill themselves, that's going to leave the door open for the opposition to come in, led by Tony Abbott. And I'm not trying to be partisan here, but I mean, just based on the economics, this guy sounds like a bit of a caveman. I mean, if he's going to roll back the carbon tax, the mining tax, I mean, how are investors going to react to that?
Well, I think companies immediately like Rio Tinto, BHP Billiton, some of the biggest commodity plays in the world right now in terms of base metals, they must be licking their chops hearing that there could possibly be some sort of unrest that could be to their advantage. I think that's one of the reasons we saw maybe about 12 months ago some of the short-term pressure on both of those names and across the sector. And I think for an Australia which is such a dominant player on the commodity scene, this maybe opens up a different can of worms that a lot of us weren't really looking to analyze today.
John, that speaks to a broader global issue, doesn't it? Because we are seeing a whole thicket of regulatory issues, tax issues, royalty regimes that are very difficult to navigate for the global mining industry, not just in frontier markets in Africa, but as we've been talking about in Australia and Canada, as you've been referring to. That makes longer-term planning very difficult, does it not?
It does, and I guess one of the reasons that strategists and consultants are doing well right now is these unique viewpoints to try to find out what's that next play. And unfortunately, Sri, there isn't really many places of safety to go from a government perspective, even here in the United States. I mean, Romney is speaking tonight, and he's against electric vehicles, and Obama is pro-electric vehicles. That does have major implications for the U.S. transportation. 71% of oil consumed is used for transportation. So we're trying to figure out what are the areas geopolitically you might want to get involved in. I really don't think there's a safe haven from a geography standpoint in many places in the world. This, in what happens today, kind of shakes that basket a little bit further and tries to make diversity in terms of energy and metals more important than ever before.
And John, the drumbeat on Iran, it's growing louder every day. The latest is they've refused to allow UN inspectors in to see one of their nuclear facilities. What's your take on this story? Do you think it's going to escalate, and how are you positioning yourself in the oil market?
You know, we just had Groundhog Day here in the United States, but this kind of feels very, very familiar again. How many times do we have to go back to the well and hear about Iran, a weapons inspector going in by the international agency and being told not to get in? How it affects the global energy markets is actually kind of unique, because many people started buying crude oil on the expectations of disruptions, but France only gets about 3% of their oil from Iran. And quite frankly, the UK has actually not taken any imports in about 6 months. So from that standpoint, it's not as big as people may actually think.
If I may jump in for a moment, we've had many guests on the show saying this time it is a little different in Iran. They're even talking about blocking Iranian banks out of the SWIFT international settlement system, which would effectively shut down the economy. We've got Iran symbolically stopping exports to France and the UK. And what if they shut down the Strait of Hormuz?
Well, I mean, again, that's an extreme point, the Strait of Hormuz. And I think U.S. military intervention, as well as global forces being unified, could actually get in there very fast. There's been drills that can show that possibly if something of that escalated to such a high point as you're measuring, they can actually deal with that. But let's get one thing clear. Iran cutting off the Strait of Hormuz, which 20% of the world's crude oil flows through, that cut my nose off to spite my face. I don't necessarily think that they're going to do that. I do think this is a louder bluff than we might have heard in the past, but one that I don't think is going to happen.
here's the thing. I mean, okay, so we've heard this before, but I mean, a lot of people are saying this time may be different. And with that threat, as Lisa was talking about, of, you know, the outside world cutting or shutting Iran out from the SWIFT transfer system, I mean, look, you do that and they're basically, you know, that's like cutting off the oxygen. So, which raises the question, preemptively, what is the risk of Iran, you know, doing to others first before getting it done to them? And what could they potentially do you think?
Well, I think, listen, outside of Russia and China, possibly, you know, looking to back them up and support them, you know, geopolitically, many of the world is against them. It's not to their credibility to move forward with this. Well, instead of talking about, you know, what they might do, why don't we start to look at ways to move to alternative energy sources so whatever they do is not that big of a deal? And I think that's one of the reasons why the United States should move toward more of a hybrid energy policy, not just be so dominantly focused just on crude.
Great point, John. Let's talk about that. The most compelling plays then in the energy sector are going to be the unconventional sources of gas and oil. Am I right? Shale gas. So companies positioning themselves aggressively in that sector are the ones that you need to be looking at.
Well, you know what, Sri? Today, interesting comments out of Chesapeake talking about margins not being up to par with they thought in the Bakken. That might actually maybe move people away from the notion that natural gas is certainly the absolute key for the United States. I think what we need to be focused in on is solar and wind, but the nuclear part of that equation is something that we're starting to see a little bit more positive tones around here, with the NRC giving a license to Southern Company last week in Georgia, the first reactor to be built in 30 years. I think that's possibly Strathmore Minerals, a client of Blue Phoenix, was able to get a strategic investment from KEPCO of Korea. Canada makes a deal with China for an alliance related to uranium. This is something that is starting to get us a lot more interested in the fact that the United States, this could be Obama's nuclear moment.
Okay,
what's happening in Iran, but what's happening home?
It's interesting because post-Fukushima, there seemed to be a pullback in global interest in nuclear. What's your outlook for uranium then?
Well, Blue Phoenix has a $64 price target on the futures price that trades on the New York Mercantile Exchange. But again, the fact that there was an immense amount of investor disinterest post-Fukushima in the uranium sector, but the fact that we just okayed the first reactor in 30 years is certainly a positive step. Westinghouse getting approval for one of their AP1000 reactors is another positive step. The fact that it's not just about nuclear. It's not just about oil. We need to have an energy policy in this country. We don't have one. So while what's going on in Australia from a political perspective is certainly interesting, is one big story here too, and that's this election and the lack of an energy policy, and we're hoping that that happens this year.
John, just very quickly, let's try and draw a line in this whole Iran debate. If you don't think that things are going to get any worse, if we've seen the story before, are prices limited at around 122 for Brent, 106 WTI?
No, I don't think so. But I think there's a bigger story outside of Iran. I think Nigeria is a very big factor, that the militant activity. The United States gets a lot of oil from Nigeria. It's one of the top imports comes from Nigeria, as well as Canada, Mexico, Saudi, and Nigeria. I think we need to focus in on that. I think that the WTI can actually start to gain much more momentum at Brent's expense in coming weeks. And I think that gasoline prices being at record prices in February in here makes me think that summer driving season, we could possibly see, as David Kotak mentioned earlier, possibly a march toward $4.50, maybe even $5. There's a lack of refinery capacity in the Northeast, and I think that's going to be a very, very big story in coming months.
Okay, John, you raised an excellent point about how the world should be looking for substitutes to crude and to carbon-based energy. But the reality is we're still years away. How much of a gap do you think there is before we can get alternative sources of energy in place to fuel global economies? And the other question is, what happens if there is a massive supply shock in the meantime?
Well, great questions on both accounts. I think when it comes to being years away, it's years away because I think that the political mandates have actually stymied growth. Look at the fact that Ford is able to come out with a car that now can have 80 miles per gallon. They were only producing cars last year at 20 to 30 miles per gallon. Technology is there. We just need to have it widely accepted by consumers. President Obama is looking for electric vehicles, 1 million electric vehicles on the road by 2015, and I think that that could be conservative. Why? Because we are at an inflection point right now. As I mentioned earlier, 71% of global oil is used for transportation. If we can fix the transportation medium, I think that we'll have a great way to have less dependence on foreign sources of crude oil, and that's globally. That's not just the United States. So it's the electric car that I think can actually literally drive the future.
Okay, an inflection point. John, let me ask you very quickly, because we're almost out of time. Do you believe in the peak oil theory?
Yes, I do. Cantarell Field in Mexico is drying up. With Saudi Arabia is actually having concerns related to water, and that's why they're looking for more alternatives. I think that the Tupi Field is not coming on for many years in Brazil. The time is really now to embrace alternative energy sources, and if we don't, $148 is going to be something that we wish we actually were at that level again.
Okay, listen, John, got to go. Always very useful talking to you, sir. Have a good day, John.
Great to be here.
Licata from Blue Phoenix there, and we'll continue to wait on